All right, it's the 6th of Feb. It's a Thursday. We've got about 30 minutes to the NY Open, and we're going to get to the charts in a second. Yeah, sound seems good. Yeah. Okay, 30 minutes to the NY Open. Um, Perfect. Let's take a look at the news calendar before we proceed. All right. So this is the steps that I follow every day, right? The prep work that is done every day. It's it's a very um, you know, thought through, logical uh, kind of a workflow that I follow. So I first start, 30 minutes before the NY session opens is when I get to my charts. Look at the news calendar first. Even though I have a rough idea what's happening for the week, I still follow through all of those. I follow through every procedure just to tick all the boxes, right? So today we've got unemployment claims that's in about an hour from now. Again, shouldn't do much. As I said, as I've been saying all this week, none of these news events are going to move price much, right? The big one this week is NFP, but these we're having a lot of volume this week. I said it right from last week. I said if you look at the daily candles, we have a lot of volume. All the candles are above 350, 360, 37, 380 pips, right? So we can anticipate again to have a fair amount of volume today, and tomorrow also we can anticipate to have quite a bit of volume, right? Because of NFP and because of how the week has been so far. So I'm not going to open any trades until this news event. It's not because the news event is important. It's because the news event is 30 minutes after the NY Open. So it makes no sense to to look for trade setups when you know that there is a news event just 30 minutes after the NY Open, right? So NY Open is 8 a.m. EST. 8:30 a.m. EST is unemployment claim. So it's best to wait. It's good sense always. If you have a news event at 8:15 a.m. EST or 8:30 a.m. EST, usually those are the two times that you have news events. 90% of the time it's at 8:30 a.m. EST, but sometimes you get like, yeah, yesterday we had one at 8:15 a.m. EST, right? So always wait for that and then look for the setup, right? But that's only if the news event is 15-30 minutes from the NY Open. Okay. Yeah, so we got a lot of time we're going to take our time with the analysis today, right? We talk about a few things. Now, we're very bullish. Let's just go up at one time frame up, and look at the weekly. Look at the weekly. We're very bullish, right? 2,880 pips up since this weekly bull candle. Since this drop here and this bullish close above 2633, we moved 2000, nearly 2,900 pips. Now we spoke about this yesterday, and I said 3,000 is in sights for gold. 3,000 is in sights because there's nothing to the left, right? Except for these BRNs, the big round numbers or the psychological round numbers. There's no price action to the left, right? It's literally literally trading through clean space, right? Except for these psychological numbers, right? So if we have a strong 4-hour close above one of the psychological numbers, that means we're heading to the next one. It's as simple as that. But anytime inside that, you can have a retracement. In between those areas, you can have retracements, right? So now we've got about a 300, just over 300 pip move to 2,900. Because we have no price action to the left, we don't know where price can retrace. Anytime in this move, price can pull back 100, 200, 500, 600 pips, right? And we don't know when that's going to happen. But on the lower time frame, we can look for signs. And I will talk about that when we get to the trading chart. I will show you an example of what exactly that sign looks like when we go to the trading chart, right? So on the weekly, this is all the information that we have because it's a higher time frame. We're very bullish and we're pushing towards 3,000, right? Now we spoke about why 3,000 because that is a key area, psychological level, a very important psychological level. And we spoke about what happened. Let's go to the daily. What happened? I did this in detail yesterday. I'll do it once more. Um, what happened the last time we had kind of a trade war, right? So around December 2017, around December 2017, mid-December, when there was talks of imposing tariffs on China, and look what happened with gold. Gold moved 1,000, almost 1,300 pips, right, in a single direction. Then we kind of averaged out or kind of averaged out a bit. But these are daily candles. These are sort of fairly large moves up and down. We kind of tapered off. And then around April is when the prices tend to drop. March, sometimes end Feb, sometimes March, sometimes mid-March, April, even prices start to drop on gold, right? That's like gold is cyclical, right? So that's when the drop starts to happen usually, right? And then around August, September is when the rally begins again, right? Because of festive seasons coming in and all of that. So prices start to go up because there is higher demand, right? So in certain countries, there's a lot of purchase, like especially in Asia, like in the Far East, there is a lot of gold purchase towards the last quarter of the year, right? So starting from about October, September, October, there's a lot of purchasing of gold, towards the Far East or the East, right? And Asia, there's a lot of purchase of gold, retail purchase of physical gold. So prices tend to move up year after year. That tends to happen towards the last quarter. So you can see that happening. You can see that on the price chart, right? This is around April. We made a high and then we started to drop. We dropped about, I think, 2,000 pips. And then we climbed, right? We climbed for the next year and a half. We climbed about 4,500 pips, right? So price did climb a fair amount. Again, I think around till about February. You can see this is 2019 Feb, towards the end of Feb, and then again we had a push down. So it's that cyclical pattern, right? You can see from here, this is August, mid-August, we started to climb, and then Feb, somewhere towards the end of Feb, we started to drop again, and we dropped about 700 and nearly about 800 pips. About just over 800 pips. And then that was, when was that started to climb again? Yeah, so then in about end of May, June, we started to climb up again, right? So this is overall on a high time frame on the weekly. That's the pattern of gold, kind of, it might be at higher prices the next year and the year after that, but that's the pattern that gold kind of follows on a high time frame. Now, that's not important for session trading at all. It's just some background information on gold. It's good to have. Okay, let's go to the daily time frame currently to see what's happening. So on the daily time frame, price has already today, probably during the Asian session, we're going to take a look at this on the 15-minute and 30-minute. But I think during the Asian session, tapped 2850. So we did have a pullback, right? So from the yesterday's high, price dropped about 340 pips, right? A sudden drop. Now again, why did this drop happen? There's nothing on the left to know why it happened, right? But as I said, this is the issue. Price can at any point in between now and the 325 pips that it needs to move to 2900, it can make a reversal. It can make a pullback, a retracement, right? To grab liquidity. I've been saying this all week, right? So it dropped about 340 pips, grab liquidity from 2850, and it's pushing up again. Okay, let's go to our trading chart. All right, so before we get to our zones today, let's do a quick recap of what happened yesterday. I was in buys. So if you watched the last 10 minutes of the stream, uh, that's all you need to see. If you need to see the setups or the trades that I take or the setups that I give out, then you need to watch the last maybe 10-15 minutes of the stream if that's all you want to see. If you want the analysis and the education bit, then you need to watch the first 30 or 35 minutes of the stream, right? That's how the stream is structured. It's the first 30-35 minutes and then the last 15 minutes, right? That's basically all you need to see. In the middle, anything in the middle, the 30-40 minutes of the stream in the middle, whatever that however long I wait for, is basically we're just waiting for price to get to, I'm waiting for price to get to one of my zones to take a trade, right? So yesterday, soon as the 15-minute candle grabbed liquidity and made this liquidity wick, all right, I took a trade. I think I got in somewhere around here, somewhere here, I think, and then I added a couple of more, a few, 2-3 positions here, and we did go up to the liquidity candle. So my final TP was 2872. I had given all these TP levels yesterday. I said around 2870 and then 2872. Those are my final TP levels. Now that trade worked really well. I had a stop loss, I think, of about, I think I got in somewhere here, about 30, let's say about 35 pips, 40 pips at the most, and price moved up here. That's just over 100 pips to 2872, right? So that's a fairly decent RR on that trade. Then what price did is price closed outside the zone and immediately closed back inside. This is, the retail traders call this a fake out. Basically, the liquidity to move in terms of orders, this is what it means. The liquidity for price to move up to the next liquidity level of 2900 wasn't enough, isn't enough. It doesn't have enough liquidity to move up to 2900. That's all it means. So it needs to move down. It needs to go in the opposite direction to grab liquidity. Where will price grab liquidity from? One of these areas. As simple as that, right? It'll move. So soon as you see a close outside the zone, and I've traded this kind of setup many times on the streams. You see a candle close, even on the 30 minutes, you see a candle close outside the zone, a candle close back inside the zone. Even on the 15-minute, immediately a candle close outside the zone, next candle closes bearish, big bearish candle closes inside the zone. That's the candle. That's a liquidity candle. Grab liquidity. You can trade it on the 30-minute, wait for that pullback, and then take the trade. And where is price coming to? We've already come to this. We've already tapped this, right? We've already tapped the fast EMA. So there is no liquidity in that, because if there was enough liquidity in that, price would have continued higher. But there wasn't enough liquidity in that EMA. So what's the next level that price has to come to? The next EMA, right? Pretty simple. So you take a trade, stop loss above your 30-minute high. I always say your safer stop loss is above the liquidity candle high. In this case, there is no liquidity candle because there's nothing to the left here. This liquidity candle is already consumed. Price has broken outside of it and closed back inside. So there is no liquidity candle above, right? In that case, the stop loss is always above the 30-minute candle high that created resistance. So stop loss goes above that. This is you can enter anywhere on the pullback. Let's say you enter at the close of this bullish candle, or somewhere here. So about a 50-60 pip stop loss, and you're waiting for the EMA. So that's about a 200 pip move down, and you can take partial positions at that EMA. And the next area, where is the next area? The EMA and the liquidity candle are around the same area. They're just about 10-15 pips apart. So where is the next liquidity area? The BRN 2850. So one you could take partial positions at the EMA, and then your final TP at the BRN, right? So that was the trade coming down. But the buys, I didn't take that trade because I took the buys and I called it a day, and that was it. Okay, so all right. Let's get rid of all of this and start this process again. Okay. And price tapped perfectly into that zone that we had drawn yesterday, all right? Look at that zone, 1 hour zone that we had drawn. Tapped perfectly, didn't break the zone, respected the zone. The zone ran right, the BRN ran right through the zone, grabbed liquidity from the zone, pushed up 200 pips again. All right. So this would have been a London trade, perfect trade to take the London session. I don't trade the London session, but that would have been an ideal trade to take during the London session for price to move up again. Right. Okay. Let's go to the 4 and let's get to work. Okay. So first thing is I'm going to extend this zone to the right. We've gone through the liquidity candle, so I'm going to delete that. Let's move these labels to the right. This is no longer high liquidity zone because it's crossed more than 50% of the way into the zone. So let's just delete that. Okay, let's start with supply first. So on the 4 we have a rally, we have a base in candle here, and we have a drop here, right? So let's mark it on the 4 the way we see it. Right, we're going to take that high, I'm going to take this base on the 4, but we're going to refine this on the 1 hour. Okay, so that's the leg in, that's the base in candle, and that's the leg out. Okay, let's quickly go to the 1 hour and refine this zone. We had a gap up yesterday, right? So when we look at the zone on the 1 hour, that's what I see, right? This is what I see. We have a yeah, going to take these 3 as part of the base and this as the leg out, right? So always work backwards. It's a lot easier when you identify the leg out, then it's easier to see the zone more clearly, right? So that's the leg out. Then these candles are all in the same range, a part of the same range of about a 70-80 pip range. They're all side by side, so that would be the base, and this would be the leg in, right? So yeah, let's draw it like this. Let's get the 4. Yeah, that's better. Okay. Let's just take a quick look at the 30-minute. Yeah, this is fine. 227 and close is 310. Okay. Yeah, now on the 4, there's another zone here. So that's 1. We have a rally here and we have a drop here. A rally and a drop, immediate drop, right? So there is a base there as well. There's a rally and that's a drop. So you have this rally on the 1 hour, you have the rally and a base and a drop. And then you have a base and a rally. That was kind of demand. You have this base and the rally. And then you have a sudden drop that broke through this demand, right, on the 4. It will be clearer on the 1 hour, right? You can see that demand level there, drop, 2 base in candles and the rally, that's demand. Price went up, dropped again, okay? So again, this would be the leg out. Yeah, so this would be the leg in, 1, 2, 3, 4, 5, 6 base in candles and the leg out, right? These 6 candles, because all of those candles have more collective wick than they have body, okay? So the high of this 337, close is 838, 838, 33. 7. Okay, I don't like to see these zones overlap each other, so yeah, that's better. Just move that zone 2 pips above so that I see that there's 2 separate zones. Okay, right. So that's supply. That's what we have, right? So they're both 4-hour supply zones because they're visible on the 4-hour. But we just had to refine them on the 1-hour. But they're both 4-hour supply zones. Okay, let's move this across now. All right. Now let's look at demand. Now we have a drop, some sort of a base, but we don't have a rally because this candle hasn't closed yet. We have no idea how this candle is going to close. It's got another over 2 hours for the candle to close, right? So we'll have to go down to the 1-hour. Now here we have this source. So this was a source that we drew yesterday. It was visible on the 30-minute, right? That was a zone. A rally, 3 base-in candles and a rally, and price reacted to it and created fresh demand to that demand. That was the source. This is the reaction. So we go to the 1-hour, and this is clear on the 1-hour. We have a drop, and we have a base, and we have a rally. Drop, base, rally, right? So I'm going to mark this like that. Okay. And what I'm going to do is I'm going to bring this down here because that's what's left of that zone. Because I want to be able to see those as 2 zones because that's the source and that's a reaction. So the close 619,883. 619,883. Okay. All right. That's it. Those are the new zones. These zones, price hasn't come there yet. So we're going to just extend these to the right. Right? Price hasn't come here yet. So we're just going to extend these to the right. Oh. Okay. Perfect. So this should be good enough. Yeah, we've covered about 600 pips of downside, so good enough, right? And we've got those are supply zones. Now, this week I spoke about this several times. I said, let's go to the daily. Just want to show you guys something. When price was here, this is a couple of days ago, right? Today is Thursday, Wednesday, Tuesday. Spoke about this on Tuesday. This was Monday, right? Yeah, this was Monday. When Monday price did this on Monday, on the daily time frame, I'm going to remind you guys what I spoke about on Tuesday. When price did this on Monday on the higher time frame, this is a liquidity grab from weekly support 2787 to push up on the daily time frame. Then I said that a similar thing has to happen on the lower time frame for price to head higher, right? This is on the daily. We got to see something similar happen, maybe on the 4-hour or the 1-hour, or maybe even on the 30 minutes, right? But usually, if you see it on the daily, and if price is trending hard in a single direction, this happens when price is trending, right? Not when price is ranging. You'll see it on the high time frame, and then also you need to see it on a lower time frame. for price to push up, because basically price has to come back, grab liquidity, it needs to grab liquidity to push even higher during the session, right? And it'll look like a candle like this, but on maybe on the 1 hour or the 30 minutes or even on the 4 hour. And that's what you see here. You see a liquidity grab, price grab liquidity to push higher, right? Now, if this is the liquidity grab, that means it's very likely that we're heading through these zones, we're heading higher, right? So now we're going to use that, we're going to store that information, and we're going to look at what price has done during the Asian session, London session, so on and so forth, to make a more calculated decision on where price can come to for price to continue higher, right? This basically is that liquidity grab from a key area 2850. So what we saw here on the daily has happened now on the 4 hour, right, for price to push higher. Now there's no guarantee that price is going to push higher, but this is how we stack the odds in our favor, okay, towards our bias, towards taking a certain trade setup. All right. So this is 1 hour demand because it's visible only on the 1 hour. So let me get that label there. That's 4 hour demand. Okay. Extend this also to the right. That to the right. That to the right. Save. Okay. Next step. Right. We're going to go through this process. I go through this process every day. So we've done the supply demand zones. Now we're going to identify high liquidity zones, right? So basically, a high liquidity zone is a zone that has taken out an opposing zone, right? So let's start with supply. Let's go down to the 1 hour because it'll be clear on the 1 hour, because in the 4 hours we don't have many candles. We do have the lows here. You can base it off when you can base that in. You can base the structure of a low, a 4 hour low being taken out, but it's clearer. The reason I go down to the 1 hour because it's always clearer. You see the zone and the zones clear. The supply demand zones or the base of the zone is more visible on the 1 hour, right? So let's start with this. Did this supply take out demand? Yes, it did. There was demand here. There's a drop, a base, and a rally. We spoke about this. There are two candles leaving the zone. So that was a fairly decent demand zone taken out by this move down. So that becomes a high liquidity zone. Right. So I'll move this label across here. Right. We've already tapped into it. We're going to take a look at and see where price tapped into that zone. Okay. The one above. This supply, 4 hour supply. Did it take out anything to the left? Yes, there was demand right here, right? So this 4 hour supply zone took out this. There's this zone here. Let's go down to the 30 minute. I think it's visible on the 30 minute. No, it didn't. Didn't take out. It didn't take that out. There's a wick that tapped into this. If that was a drop base rally, that's a demand zone, then yes, it did take out. Yeah. Okay, so if this was the base, for example, let me just quickly show that. If that was the base, yeah, that moved down, took that base out. Okay, so we're going to mark the one above also as a high liquidity zone, right? Let's clean up everything very quickly. We've got plenty of time. We've got another 30 minutes on you, so we're not in any rush today. Okay, done. Next, We're going to identify a high liquidity candle, the zones that we've drawn now, right? Oh, sorry, there is a new zone here. I didn't draw that. Okay, so did this demand zone take out anything to the left? No, it hasn't. It hasn't taken. Let's just quickly look at the 30-minute time frame. Yeah, it did. It did. So there is a drop, a base, a drop here, and this move up took out that zone, right? That one right there. Drop, base, drop. That would have been the zone. About a 26, 27 pip zone was taken out by this move up. So this too is a high liquidity zone. It's going to move this label up here, right? Okay. Next thing we're going to do is now identify a high liquidity candle. Now price is already dropping, has tapped this zone and dropping. We need to find out why. Where is it dropping from? What's pushing price down? So we're going to look for the largest bearish candle in this zone. So far we've got that. That's a 40 pip candle. This candle is outside the zone, 61 pips. That's a 49 pip candle. This is the largest one right now. Okay, this one right here. Let's go down to the 30-minute. This is still the largest candle. It's a 50 pip candle. Let's go down to the 15-minute. It's 40 pips. Yeah, that would be the candle. So I'm gonna mark that candle on the 30 because it's only a 49 pip candle. Yeah, that's good enough. Three three seven eight double three. Yeah, it's the entire width of that zone anyway. The price is reacting to that candle. Okay. Because even if you took the 15-minute candle, it's a 41 pip candle. Just a second. Yeah, that's the candle right there. It's a 30-minute candle. That one right there. Okay, that's what's pushing price down. Okay, right. Let's look further up. If price comes further up, is there a liquidity candle in here? Again, start from the 1 hour. Got this big candle here that is reaching outside the zone. Let's go to the 30-minute. It's also that same candle. Too large, 181 pips. It's a 130 pip candle. Let's go down to the 5-minute. On the 5-minute, it is this candle. The reason we have to go down is because it's a very large candle. Even to the 1-minute. Yeah, we'll have to go down to the 1-minute on this. It's a very large candle. Usually I never go to the 1-minute, but the candle is reaching outside the zone. So there is this candle, which is a 53 pip candle. That's the largest candle in the zone on the 1-minute time frame. Okay, so that's the candle. That's a liquidity candle right there. 866,337. 866,337. 337. Okay. Now, have we tapped it here? High 337. Yeah, we've tapped 337. So we've tapped that 1-minute candle here. Right here. Perfect tap, and we've dropped, right? and that's the Asian session high. That candle tapped into that 1 minute liquidity candle, and you can see the drop, 230, 240 pip drop down. Okay, that's why these liquidity candles are so important. It really shows precisely where price is turning. Okay, all right, that's done. Now let's look for here. Let's look at this zone here and see if there's a liquidity candle here. So whenever I see a wick here, I do mark the wick, because the wick by definition from a key area is a liquidity wick, right? So I'm going to mark that. Let's go down a 30-minute time frame. Got that candle, but that reaches outside the zone. Let's go down to the 15-minute. Still that candle. We go down to the 5-minute. There's this candle right here, the 5-minute. Okay, and that's the area that we've tapped into. You can see the tap into that liquidity candle and price pushed up. Okay, so that's the candle. 862, 266, 266. Okay, done. So we have our liquidity candles up here for price to put, if price gets there, to find liquidity to push down, and we have a liquidity candle down here if it gets there for price to push up. Okay, and then also remember, after that liquidity candle, right, which is a 60 pip candle, if the liquidity of that candle is not enough, where will price come to? 2850. That's another liquidity, an area of liquidity, right? The BRN. Okay, 2850. And then if that's not enough, price will come down to the next area of liquidity, which is the next liquidity candle, which is this one. That's also about a 70 pip candle on the 15-minute time frame. Yeah, that one right there. That's 57. We had marked this yesterday. That is 67. Yeah. And then further down, we're going to take a look at this area as well in case price comes further down, right? This is the roadmap. I spend time on this because we have, this is what shows me where price can possibly go to, okay? On its way down or on its way up. Now this is a fairly large zone. This is a 200, almost a 220 pip zone, right? So it's, let's see if you have two liquidity candles in the, sometimes it does, even this zone is very wide. All right. The 1 hour, we've got this, that's 158 pip candle. There is this also, so 204 pip candle. Gonna mark this candle for now, and then we're going to try to narrow it down. On the 30-minute, it's still this candle. It's 169 pip candle. Go down to the 15-minute. Down to the 5-minute. It's 120 pips, still too big. $78 pips. 5-minute. There's a candle right there on the 5-minute. This one right here. It's a doji, but it's still a bullish candle, 116 pips. Let's take a look at that on the 15-minute. It's this one, 114. Yeah, it's this one. Yeah, that's the candle. This one right here. So it's just one candle in that zone. 521386. 521386. Okay, done. Perfect. We've got another 20 minutes for news. Got plenty of time left. Okay, so those are the zones. All right. So I did take my time today because we have news. So these are the liquidity candles, right? In this zone, that's the candle right there. Um, I already did it. I showed it on the lower time frame. Then in this one, this is the candle, and this one, this is the candle, right? These are areas of liquidity. So basically, the reason I'm drawing these zones, if you are here for the first time, I haven't been here before, is because this shows me where price is heading to grab liquidity for it to go in the opposite direction. So if price comes here and it finds enough liquidity, then it's going to reverse and go back up. If it doesn't find enough liquidity in this liquidity candle, this light green box that I've drawn, it's going to come to the next liquidity area, which is 2850, right? Go back to this chart, right? Those are the liquidity areas. If it doesn't find enough liquidity at 2850, it's going to come to the next liquidity candle, which is down here. So once we break 2850 and we have like maybe a 15-minute candle close or even a 5-minute candle close, maybe a 15-minute is, but 15-minute candle close below 2850, we know where we're coming to next because that wasn't enough. So if you have a bearish candle close below 2850, we know that the liquidity in at 2850 wasn't enough to push price back up again, right? So it's coming down. And where is it coming? It's going to drop another 105 pips to come to this liquidity candle, right? If it finds enough liquidity here, if it has collected enough liquidity at these levels, and that's the last place it needs to collect liquidity from, if that liquidity is sufficient enough, then price will go the other way. If that too isn't enough, and you have a 5-minute or a 15-minute close under this candle here, which is 2832.5, let's say, we're coming to this liquidity candle, which is another 75 pips away, this one, right? If it finds enough liquidity, it'll go in the opposite direction. That's all price does. It goes to these areas, grabs liquidity. If it has enough liquidity, if it finds enough liquidity at those zones, at one of those key areas, at one of these key areas, it'll grab enough liquidity and it'll go in the opposite. If it doesn't have enough liquidity at one of those areas, it'll go to the next area to grab liquidity, right? That's all price does every day. All right, so we're dropping, right? Now we got to wait. We got another 20 minutes, about 17 minutes. Got to wait for news. Let's see how far we dropped to, where we're coming to. Okay, so while we wait, okay, I'll be back in a couple of minutes, and when I come back, we're going to go through what price has done, right, in the Asian session, the London session, and by that creating a kind of an idea or a story of what price could possibly do in the New York session, the first couple of hours, first two hours of the New York session, right? Those are the hours that I trade. I trade the first 2.5 hours of the New York session. And then, so once we've done that, then we'll see if that what we visualize plays out, starts to play out. If it starts to play out the way we're visualizing, then we can take a trade, right? Uh, um, and if we do take a trade and price goes against us, fine, no problem. That there's a probability of having losses also. Then we manage risk, and we manage risk in a very logical manner, so that we apply that same logic in every trade every day to manage risk, right? Because there are losses. There are losses because if you have let's say a 50% win rate or a 60% win rate, that means 40 out of every 100 trades you take are going to be losses if you have a 60% win rate, right? So there is a probability, no matter what you do, there is a probability of a trade winning and losing, right? But in those losing trades, there's something to be done, not just sit and watch the trade go hit your stop loss. There's something that you can do, and that's what I try to do every day. So whenever price goes against me, I use you know, price action and a simple rules, right, to manage risk, to cut my losses, so to not let price go hit my full stop loss, right? So you know, if I'm in a buy trade, sometimes I wait the M30 low break or M15 low break, I start to cut positions, right? And if you watch my streams, you'll see how I do that. And I hope I won't have to do that today. I hope we'll have a successful trade. But if you don't, then that's fine. I'll manage risk. All right. So I'll be back in about 3 minutes, 3 to 4 minutes, and we'll go through the Asian and London sessions. All right. Okay. All right. Let's look at what price has done. That's the candle open. That's a daily candle open. We opened the daily candle open price is 2864.28. Okay. So we opened here, pushed up, Asian high. Three, three, We'll just change the color on this because it's just because it's otherwise not visible. It's the Asian low. Yeah. 369. So London high. 125. So London low. Okay. 883. All right. So prices moved about 96 pips in the Asian session, and in the London session we moved 220 pips, right? So about 100 pips in the Asian session, about 220 pips in the London session. That's what price has done. Now what happened is that's the open, priced pushed up, retraced, grabbed liquidity from the EMAs, again pushed up into that liquidity candle that we had marked, tapped the liquidity candle right to the pip, okay, created the Asian high and pushed down, right? Tried to come and break this low, couldn't, went back up to get back there, couldn't, didn't have enough buy orders during the Asian session. As I've said, the Asian session has low liquidity, didn't have enough buying power to push higher than this Asian high, came back down and eventually closed below the Asian low, right? While it was doing that, it created the London high, right? So it pulled back up, created the London high and closed below the Asian low, and then continued down to grab liquidity from 2850, right? Then we pushed up, closed above um, the Asian low, and we tried to push straight through to the London high and back to the Asian high. It didn't have enough liquidity, pushed back down. Now, that's what's happened. Since price closed above the Asian low and didn't have enough liquidity to head higher, if price closes back above the Asian low, we should head higher, back to the Asian high. First the London high and then the Asian high. Now, there is no liquidity here, right? There's not much liquidity. You can see that arch kind of a thing. You can see price tapering out here, ranging a lot. There is less liquidity. There is more liquidity up here in this candle, this big candle, right? So it's likely that if we close above the Asian low, that will head higher back up here, right? So we got to watch for that. But to do that, price needs to grab liquidity to head higher. So we'll have to wait and see. Are we going to come down? Where is what time? It is 7:10. Okay, are we going to come down, grab liquidity from here to push up, or come back to 2850 and then push up, right? We'll have to wait and see. Yeah, that's what I would like to see. I'd like to see a close back above here. That's a confirmation that we're heading higher. If we close above the Asian low in the NY session, maybe the next 15-minute candle or the 15-minute candle after that, then it's very likely that we're heading back up, right? So that's about a 100 pip move up to the Asian high through all of this. So this candle was a 50 pip candle. We've come 20, we've come about 1/3 of the way into, just over 1/3 of the way into it. Yeah, yeah, we should head high. If we close above the Asian low, we should head to the Asian high. Not here, not the London high. We should head higher, above this candle, right? Let's just look at the 30-minute time frame. Um, 1 hour, 4 hour. Yeah, possibly creating a bottom wick on this 4. This 4 hour candle has no bottom wick. So possibly needs to first create a bottom wick on this candle. So which means price needs to come lower. So this candle low is 58.22. Let's put a price level there. 58.22. Yeah, so we should break 58.22. We should come down because that candle has, the 4 hour candle has no bottom wick. Yeah, should come to this liquidity candle right here. The 5-minute. Oh, yeah, we should break. Yeah, so this candle has no bottom wick. So very likely that we come below this. The 5-minute, 15-minute, yeah, here. This open is 57.28. No, this one. Yeah, under here. Let's put another one there. So I think we're pushing down. We're going to push down another 50, 60, about 60 pips. 55.71. Yeah. So 58.22 is the 4 hour low. We should break that. And then we should break this candle low because there is no bottom wick on this candle. We should break this low before price decides to head up. Right. But I want to see also, if we close below the Asian low again, which already happened, if you're rejecting this, that means we're heading down. We're heading back down. And seems to be that's what's happening because we tried to get back up to the London high and we rejected the London high. There's a 30-minute resistance form there. Yeah, so we're heading down, right? That's the other way to read it. If we close above the Asian low, we're heading higher. But now since we've closed below the Asian low, and we've rejected the London high. That's a London high. We rejected it. We came up. We rejected it. We're pushing down. So we should come down. Should be coming down. Yeah, we're coming down. We should be coming down to maybe towards the bottom of this liquidity candle very easily. It's an 80-90 pip drop. Got about a minute and a half for news. Let's see what this one broke this high. That is 1430. That's 14. Yeah. Here's what I'm going to do. Yeah. I think the next candle is going to open without a top wick and just continue down. Yeah, that's what's going to happen. We're going to push straight through. What are the numbers? What are we expecting? Unemployed 214, expecting high numbers. Yeah, I think we're going to push straight through. What's this low? 044. 044. This high is 887. 887. So what I'm going to do is I'm going to take a sell here, right? Anticipating price to come down. Let's take another one here. Two eight five five, 2856, 2856. Let's see. 51 pips. Yeah, we have volume. NY session has volume. Should be coming down. We've rejected the London high. That's a London high right there. The numbers came bad, so we should eventually head higher, but it might pull down to this area. Yeah, that's a London high. Should push down. Okay. So the reason for this trade is the 30-minute has closed below this Asian low, close below. We're rejecting the Asian low. You can see that we rejected it. We also rejected in the pre-NY session, exactly the pre-NY session. This is 1400 hours IC markets over time. We rejected the London high also. So we rejected the London high, closed below the Asian low. And the idea is we should head down to an area of liquidity. So the area of liquidity is here. This candle has no bottom wick here. On the 5-minute also, this candle has no bottom wick. So I'm anticipating price to come down there at least to this candle, right? We should get there. That's about a 70 pip move down. And then further down, maybe around to 2853 or 2852. That's the idea. Now, if price closes back, if a 30-minute candle closes above, or maybe a 15-minute candle closes above the Asian high again, the Asian low, then I might look to manage risk. All right? I might look to manage, but I need to see confirmation. So confirmation comes with basically seeing at one of these key areas, that's the Asian low right there. Second, let's take a look at that again. Yeah, that's the Asian low right there. So if a 15-minute candle or maybe a 30-minute candle closes above this, just extend this. Yeah. If we close above that, then I'll look to manage risk. Right? I'll look to manage risk. But the idea is that since we've rejected the Asian low, we should be heading further down. Should be heading further down. Yeah, there's no bottom wick on that 4-hour candle. And the high 7026, which is this one, 26, yeah. We might come back up here. That's okay. I'm going to wait for the 30-minute candle to close. We might come back up here. 591. Close 671. Yeah, I'm going to manage risk if a 30-minute candle closes above the Asian low. That's when I'll start to close my positions. Until then, we might just pull back up to grab more liquidity to head down above this 30-minute candle high. It's very possible. This high is 2865. So yeah, this one, 2865, this candle high. We might come above here to grab liquidity to head down. That's fine. If a 30-minute candle closes above 2863.6 or 2863.5, that's when I'll start to manage risk. Okay, so that's the idea. The idea is for price to push down. Safer stop loss would be above um, this London high, right? That's very wide. A more aggressive stop loss can be above this M30 candle high, right? That's that's fine, right? But obviously, I'm going to let price get there, so we'll just put a mark there. Was this high 71.25, 71.25, 71.25, and this high is 68.87. 87. Okay. Those are hard stops, but obviously we're going to wait for price to get there and hit those stops. We're going to manage risk. I'm going to manage risk, right? Um, yeah, we might have a bit of a slow day today. Let's see, because closed above with no bottom wick here. We could push down to create that bottom wick before heading higher again. That's possible. Let's see. We're ranging right now because if you look at the EMAs, they're flatlining. They're both moving sideways. Price is neither above them or below them. They're at them. When price is at the EMAs, at both EMAs, that means we're just flatlining. We're just ranging, right? So we just have to be a little patient, wait for volume to come in. The idea is that price has rejected the London high, right? That's a London high right there. Where was it? This one? Yeah, this one right here. Yeah, just got close there. Let's move this up a bit. This high 125, so let's make that 132. Yeah, now it's clear. Okay, so that's the London high. Price rejected the London high in pre-NY session. Push down, grab liquidity from the liquidity candle, push price down, closed below the Asian low, and it it's coming down. That's what it shows, right? It rejected the London high and closed below the Asian low. So we're anticipating a move down, heading towards demand, right? I would have liked to get in here. If price pulls back, I'll get in here, but that's why I would have liked to get in, not down here, up here. But then there was news, so maybe price, the reason I entered these trades is maybe the next candle could have pushed straight down without creating a top wick. Because when there's news, that can happen, right? But if there's no volume during news, then this happens. Price just pulls back up a little bit and then continues down later in the direction that it was heading, but it happens a little later. It doesn't happen with news, right? Okay, we got about 2.5 minutes for this 15-minute candle to close. Let's see how it closes. Um, it needs to close bearish. If it closes bearish, then the next one has there's a higher there's no certainty, but there's a higher possibility that the next one can break this candle low and head lower if this closes bearish. But this needs to close bearish for that to happen. There's a high probability of that happening. If it closes bullish, there's a higher probability of price breaking this bullish candle. If this closes bullish, breaking the bullish candle low, creating a bottom wick and heading higher, right? There's a higher probability. Again, no certainty. There's a higher probability of that happening. But if it closes bearish, then there's a higher probability where price will break the low and head lower. So it would be great if it closes bearish in the next 1.5 minutes. Seems like we're going to close bearish. About 40 seconds left. Let's see. Yeah, price, this 15-minute candle came back to that Asian low. Grab liquidity from it. See this candle? Tapped into that Asian low, 2863.67. If you look at the 1-minute time frame, look at that. No, sorry, this one. Yeah, this one right here. Grabbed, pushed down, 40 pips down. It's open 57.28. Yeah, so we closed below 57.28. We're heading down. So I'm going to keep my eye on 57.28. There is no bottom wick there. And then the 5-minute here. This is the 4-hour low. Let's see, we need to see like a 5-minute candle close below that 4-hour low for price to head low. It's ideal to tap that low. This is the 4-hour low. 1300 hours is when we start open the 4-hour candle. And then this is the low on the 4-hour time frame. That low is 58.22. This one right here, 58.22. So I want to see a 5-minute candle close below this 58.22 for us to head to 57.28 and then to this candle low, 55.71. Let's change that color, 55.71. Okay. Might have a pullback. Might have a pullback because on the 15-minute time frame we're just pushing down without a real pullback. So we might come here and get a pullback and then push back up again. Again, I'm going to follow the same logic that I follow every day, right? Price action based logic. If I see a 30-minute candle close above this Asian high, I'll manage risk. I'll close most of my positions basically, right? If let's do this also. Let's be a little bit more aggressive with managers, but again, price action based, logical price action based ways to manage risk. This high, 65, 28.65, right? 28.65. Okay, so if price breaks this high, breaks 28.65, I'll close again. I'll manage risk. I'll close a few positions, right? So we're not going to wait for this stop loss to get hit. If it breaks this M15 high, I'll close some positions. If the 30-minute candle closes above the Asian low, I'll close more positions. A 5-minute candle needs to close below the 4-hour low, which is 28.58.22 for price to head down. It's got to be a little careful because price has tapped into this liquidity candle again on the way down. So we might have a pushback here. It's got to be a little bit careful. See, we've tapped into this perfect 5-minute liquidity candle and we're pushing back up. Let's see how this 5-minute candle is going to close. It's got to pay attention. This first tap is very important. Tap on the way down, This is the first time price is coming to this liquidity candle, right? On the way down. On the way up, it tapped it twice. That's fine. But on the way down, this is the first tap into this liquidity candle. So the 5-minute candle is very important. If it closes a strong bullish, that means we're heading higher. Yeah, we are rejecting that. Doji. Okay, it's a doji. If it had closed strong bullish, I would have taken a couple of, maybe 1 or 2 positions off, but it's a doji. So it's basically a doji means it's nothing. This candle has no information in it. The price opened and closed exactly at the same price, created a high, created a low, and the candle open price and the close price are exactly the same or almost the same, maybe a point different between the two, right? So in this case, it's opened at 59.86, closed at also 59.86, exact same price. So that candle, it's as if that candle doesn't exist. So we are still going off this candle, the information on this candle. And this candle is still bearish. Close below, this has no information in this candle on the 5-minute. As I said, I want to see a 5-minute candle close, needs to close below 2858222, which is the 4-hour low for us to head lower. 5-minute candle needs to close below that. Not tap it and go up, but close a bearish candle close below 285822 for us to head lower. That's the 4-hour low. Should have taken some positions here, right at the Asian high, the Asian low. Have been great, 60 pips instead of 35 pips. All right, let's see if we can close. If this candle, this one almost tapped it. Now we've broken the 4-hour low. So on the 4-hour time frame, we've turned bearish and we've broken the previous 4-hour low, right? I mean the current 4-hour low, of the 4-hour candle, we've broken that, creating a new low, right? So in terms of what's happening is in the NY session, we're creating a new low, right? Let's see if we can. If the 5-minute candle can close below this, we've got a 2.5 minutes for the candle to close. Just about 2 minutes for this candle to close. Let's see. It's got to close below. 5-minute candle needs to close below the 4-hour low, the previous 4-hour, the 4-hour low that we had. If not, if you reject, then we're heading higher, right? And then it's always good to take some positions off because the probability now is less of price going in your direction, right? Once you see price action start to form against you, there is still a chance that price can go in your direction, but the probability of that happening gets lesser and lesser and lesser. How long have I been here now? 25. Yeah, it's got about, I'll be here for another to the NYSE open. Another 35 minutes, 30 minutes. So the 1 hour candle is going to close in 5 minutes. Strong bearish candle closing. Let's see. The next one might pull back though. Okay, so the 5 minute candle is closing close below the London the 4 hour low of 28.5822, which is a good sign. So now let's see. Yeah, if the 15-minute candle, now the 15-minute candle has tapped this 15-minute candle wick that had no bottom wick. We've already tapped it. I would like to see price come and tap the 5 minute here. It's another 14 pips away. What I would like to see is a 15-minute candle close just like this, below 28.5822. Just like the 5 minute closed, a 15-minute candle close. Because if the 15-minute candle rejects and closes back up, then it's likely that we create a bottom wick and push up, right? You can see these wicks, what price did. It pushed up from that area, from 28.5822, pushed up and head higher. So we can replicate that move again going up. So we don't want that. We want to see it close below. So for price to do what it couldn't do before, it tried to do it here, it couldn't. So we want to see it for it to do it now, right? Because this is volume time. So this is the time that if it's doing it, this is the time which it could do it. Okay, so we're pushing through to that 5 minute. Let's see if we can get there. That's about 5 pips away, 6 pips away. Partial positions will close here. 2856. Just a couple of pips more. Yep, perfect. 2856. So those positions were about 56 pips on those positions. Now we got to find a way, a very logical way with price action where this trade doesn't become a losing trade, right? So I'm going to keep these TP levels. I'm not going to do anything to them. I've got a couple of positions open. But we have to find a way to manage risk. So let this high. What's this high? 70.26. 70.26. Let's see how much of volume there is in the New York session. That's important because we're getting this price will start to range now. 52 pips. 45. Not a lot of volume. 48. Around 45 pips. Okay, not a lot of volume. So it's hard to say what NYSE might do because there's not a lot of volume. If there was a lot of volume, then like I said yesterday, if you were here yesterday, we can anticipate continuation or reversal with NYSE open, right? Just like we saw yesterday. But there's not a lot of volume. These candles are around 40 pips, averaging about 40 pips, the 15-minute candle. If they were like 50, 60 pip candles, then yes, that's a lot of volume. But 40 pips, that's about 40. That's also 44, 43. That is just 50. This is also under 50, 48. Yeah, they're ranging about 40. So it's hard to say what's going to happen. Honestly, it's hard to say. You got to Got to be careful. So here's what I'm gonna thinking of doing. Not sure if these TP levels are gonna get hit. Okay, here's what I'm gonna do. A very logical way of managing risk, again, based on price action. If a 15-minute bullish candle closes from this liquidity wick, from this liquidity candle that we marked, a 15-minute bull candle close, I'm going to close everything. Simple. Because that means now there's a liquidity area. There is not much of volume in the NY session, NY open. So we don't know for sure if there's going to be volume with the NYSE open. Uh, it might range. It might be the same sort of volume, around 40 pips per candle, 15-minute candle. So if I see a 15-minute bull candle close here, then I'm going to close. I'm going to close maybe at least one of the positions, one of these two positions, because I don't want this trade to turn out to be a losing trade, right? Or a break-even trade. There's no need for it. It's moved. The ideal entry was here, the Asian low, right? That's where price came, tapped back in and pushed down. So price has moved 80 pips already. So on an 80 pip move, why now price has gone 80 pips in my direction? Why should I let that become a break-even trade or a losing trade? So as soon as I see the first 15-minute bull candle close, I'm going to close either both positions or one of them. All right, but I'm going to keep the TP levels exactly where they are. I'm not going to do anything to them. Just going to keep it exactly where it is. Just going to wait for the 15-minute candle close. So the 1 hour candle has closed bearish, right? But it's closed right at this level, just above it. So it's we could push back up. Now we've got about 30 minutes to the NYSE open. So this is the time when price usually kind of tends to range a bit, slows down, and then sets up for the NYSE open, right? But we've not had a lot of volume in the NY open. So there is, uh, we don't know they're going to have a lot of volume in the NYSE open. So we'll have to just manage risk according to what we see on the chart, not on what we assume might happen, but on what we see. So on the NY Open, the candles have been ranging about 40 pips. In the NY Open, the first hour of the NY Open, about 40. So the 15-minute candles, we had a 15-minute candles close since the NY Open, and all of them have average range of about 40 pips, right? That's not a lot for the NY session. That's very low. Very low, right? Sometimes usually get a 70 pip candle. 70, one of those 15-minute candles out of the four is like a 70 pip candle, a 75, 80 pip candle. But this is 40. This is on the lower end of it. So there is not much volume, right? So we have to be cautious. So the first 15-minute candle close from this liquidity candle, I'm going to close either both positions. I think I'll close probably both positions. And then after that, you just got to wait. You got to wait for the NYSE open and see if there is another setup form, or you call it a day. Right? What I advise for new traders is, for those who are trading price action, if you're trading an indicator, an EA or something, that's a completely different way of trading, and you don't have to follow these rules. But if you're trading price action based on on zone, supply, demand, support, resistance, it's best to stick to one trade a day. It's best. At most, two trades a day. Nothing more than that. Best to stick to one trade a day. Right? That builds in a lot of discipline. It also keeps you from taking bad trades and also good trades, because you don't know what the outcome of the trade is. but it'll keep you from taking trades. It'll keep you from over trading, over risking. Those are the main two reasons why retail traders blow their account. So yeah, so one trade a day is best. One session, one trade a day. If you take a loss and you see another setup form according to your plan, and you've managed risk on the loss, you've managed risk on the loss that you've taken on the losing trade, then yeah, then you've not lost your full risk for the day. Then it's okay maybe to take another trade, but it would be best to take one trade a day and create that discipline, because then when you have to go over your trades over the weekend, um, there's not many trades to go over, just maybe 3-4 trades at most for the week to go. So it's easy to learn. You got to review your trades. That's the only way you're going to get better. You have to review. You got to spend 20 minutes on a weekend, 20-30 minutes at most tops on the weekend, and just go over your trades. Look at what you did right, look at what you did wrong, and then see how you can improve on what you did wrong, how you can do something different or better. If you made any mistakes, you made some silly mistakes, so you can see how not to find a way how not to make those mistakes. And if you did everything right, then look at, okay, if I did everything right, then I checked all the boxes. Then think of, okay, if I see this again, then I'm going to do it again. I'm going to do all the right. So that builds it builds confidence. So when you have a winning trade where you've done everything right, that builds confidence. So okay, now I'm going to find a way to replicate this again, this win. I'm going to find a way to find that trade where I can tick all the boxes and replicate that win, right? So you have to go over your trades, and if you take only one trade a day or 1 to 2 trades a day, then you have about 4 to 5 trades to review on a Saturday or a Sunday. Okay, so let's see if you're closing. Again, I want to see another 5-minute close below 2856 for us to head down. Again, this is a doji, so it's got a bullish doji, kind of a bullish doji. Doesn't mean much, but when you start seeing these bull candles on the way down, you got to be careful. Start because when you start seeing them on the lower time frame, on the 5-minute, those bull candles, when the next candle closes, then that becomes a 15-minute bullish close, right? So you got to pay attention to these bull candles on the 5 minutes when they start closing on the 5 minutes, because then if you have a couple of them close against you, that means now you have a 15-minute candle close against you. So again, I want to see a 5, just like we had a 5-minute close below 2858.22. I want to see a 5-minute close below 2856.23, right? This fib level here for price to push down. It's got about 2 minutes, 2.5 minutes for this 5-minute candle to close. We're going to wait and see. Yeah, this would have been the right entry here on this pullback when we tapped here. I just missed that. I guess I was talking too much today. Price pullback, that was the liquidity area. Price tapped to that Asian low and pushed down. Perfect. Right to the pip. 86 pips down. We should come down. We should come down. It's clean space. There is this wick. Once a 15-minute candle. Let's see, on the 5-minute, what does it look like? Yeah, a 15. Yeah, 6 minutes more for this candle to go. This candle, we need a 15-minute candle to close below 2856.225, right? That's basically this wick here. This 19 pip, 20 pip wick here. A 15-minute candle needs to close inside this wick, bearish candle. Once it does, then the next candle is going to break the low and head down. Because what price couldn't do on its way up, it couldn't close down, come back down. It's trying to do now during volume time, right? It's doing the opposite. So price created a wick, pushed up, Now on its way down during high volume time, if it closes a 15-minute candle inside this wick, inside this 19.5 pip or 20 pip wick, then the next candle will break the low and head further down. We've got about 5.5 minutes for this candle to close. We'll have to wait for the candle to close. In the last 10 minutes before the NYSE open, before the NY last 10 minutes, let's see if there are any possible trade setups that I can give out for the next 2 to 3 hours of the NY session. Yeah, we gotta wait another 4 minutes for this candle to close. Let's see. The moment again, moment of 15-minute candle closes bullish. That's it. I'm going to close either both these positions or one of them. Because we got to remember, we are in a high liquidity. This candle is a high liquidity candle. Price has moved 90 pips. Now over 90 pips already. That's the move. NY session move over 90 pips already. So and that's a 90 pip move on a with kind of low trading volume, right? So that is a fairly large move for low trading volume during the NY Open. So NY Open candles, 15-minute candles are about 40 pips, averaging around 40 pips. And we've had a 90 pip move, or plus 90 pip move during, I wouldn't say low volume, but kind of low volume, right? It's basically not a high volume NY Open like we saw yesterday. Compare today's candles to yesterday's candles. Look at that candle. 51 pips, 72 pips, right? So you're averaging about 60 pips, okay? And then that one too was 40 pips. So it's a higher average. And then you can see the volume coming in after that. NYSE, you can see the volume continue up, right? 45, 53, 84, and then again, a lot of volume, 132, lots of volume. So we had a lot of volume yesterday, NYSE, but we don't know if that's going to happen today because we've not seen fairly large 15-minute candles with NY Open. But again, it's not a certainty. We might have big candles in NYSE Open, right? 60, 70 pip candles. We don't know. But this is the trend. Usually when NY Open has kind of a bit low volume, then NYSE Open also doesn't have a lot of volume in it. Kind of mirrors what happens in the NY session, NY Open. And when I talk about the open, I'm referring to the first 1 hour, right, of the open. The first 1 hour, the 1 hour 15 minutes of the NY Open. So that's from 8 a.m. till about 9 a.m., 9:15 a.m. tops. And then NYSE Open is from about 9:30 a.m. EST till about 10:30 a.m. EST. Okay, got a minute for this candle to close. Let's see if we close below 2856. We should push down because we are closing inside this wick. It needs to close inside this wick. We need a bearish close inside this wick for price to push down. 20 seconds. Okay, yeah, we closed inside the wick, perfect. Okay, close inside. We should break the low. Technically, we should break the low and head down. 15 pips down. The next to 2853. That's my next partial close, 2853. But still, if a 15-minute candle closes bullish, same logic. If it closes bullish, I will close my positions, either both of them or one of them, right? Because you got to remember again that this is a liquidity candle and we're not having a lot of volume. So we might range or we might pull back all the way. We don't know. There's not a lot of volume yet. There's a decent amount of volume, but not a lot of volume. We're not seeing those 70 pip candles. That's 49. That's 33. 41. 45. Yeah. Okay, I'll wait another 5 minutes and then we'll discuss ideas for the next 2 hours. Wait for the 5-minute candle to close. Yeah, might have a bit of a pullback now. This 5-minute candle has closed just below this for low time frame support, 5-minute support, right? And below this support level, below this support level. This is an important level. We had marked it 285571 and I said price will come and tap that, and it did. So that's an important level. We've had a 5-minute and a 15-minute close below that at 285571. So now since it has, we might be pulling back for a liquidity to grab liquidity for that top wick before we head down, and that's fine. Close below this, that's important. Below 2855. That's exactly 2855. The move today might be a bullish move for the day. Might be a bullish move, right? So we're going to talk about that in a few minutes. But the move today might be a bullish move because we've not had um, a pullback. We've just fallen down. So this might be a move down to grab liquidity to head higher, right? So the move today for the day might be, for the NY session, might be a move that goes up. We'll talk about that in a few minutes. This is where prices now begin to kind of range for the NYSE Open. So I still think we have a little more. We have price needs to push down more to grab liquidity. Yeah, at least 2852 or maybe lower. Okay, right. So let's look at what price is showing us in 30-minute. We're ranging. Okay, to be honest, we're ranging. There's nothing really happening because you can see the EMAs are flatlining. Price is closing below the EMAs and coming back to the EMAs. We're just flatlining, right? Um, when this is the case, when price is ranging, always wait for M30 support or resistance to form to take a trade in your direction. Okay, simple rule. Because you're waiting for a better confirmation time frame for session trading, which is 30-minute, to take a trade, right? So wait for M30 support or M30 resistance to form, take a trade, because we're flatlining. We're just moving sideways right now. EMAs are moving sideways, prices is closing below them, coming back to them. We're just moving sideways. There's nothing happening, right? So wait for, if price is to move up, if you're looking for buys, wait for M30 support to form, either at the liquidity candle. This candle, 30-minute candle, has another 8 minutes to close. If this candle closes a bull candle, I'm going to close all my trades. Okay, because then that means the 15-minute candle also has closed a bull candle, and the 30-minute also has closed a bull candle, right? Because the previous 15-minute candle closed bearish. If this one closes bullish in the next 8 minutes, that means it's likely that the next one is going to break the high and continue higher. There's no reason to hold the trades in drawdown. It's going to get out of both trades, right? So again, let's go back to the ideas. So if you're looking to take buys today, wait for M30 support to form either at the liquidity candle or at the BRN, right? Wherever it forms, either at the liquidity candle or the BRN. Not a doji, not a bullish doji, but a bull candle, M30 bull candle, proper M30 support to form. So when I mean support to form, that's M30 support for me. That, okay? Uh, Let me show you what a doji looks like. This is not this candle. That's a doji, right? Um, that kind of candle, right? Not this one. That's a doji. That's a bullish doji, right? So wait for M30 support to form either at the liquidity candle or at the BRN, or if price drops further down, then the next area is this. Once we break this candle low, I said this at the beginning, once we have a 15-minute close below or a 30-minute close below 2850, we're heading to this, which is another about 115 pip drop, right, from 2850 to this liquidity candle. So wait for M30 support to form and then look for that M30 retracement to take the buys going up. Stop loss, always safer stop loss under the liquidity candle, low if you're taking buys. So if it's from here under this M30 candle low, or the more aggressive stop loss under the M30 candle low that formed support. All right, just a second. Okay, yeah. If you're looking for sells, wait for, I honestly don't see sells. I don't see sells. I honestly don't see sells. The sells have already happened. The move has already happened. So the next move is a buy move, right? What I just explained, it's a buy move. If it sells, if you really want to look for sells, then keep an eye on these areas. The Asian low, um, the Asian low and the EMAs, right? Keep an eye on those areas and wait for M30, the pullback and M30 resistance to be created, right? Because we're ranging right now. Nothing's happening, we're just ranging. So wait for M30 resistance to be created and then the retracement and for price to come down. And the stop loss would be, because there is no liquidity candle here, the stop loss would be, safer stop loss would be above the M30 candle high that created resistance. Again, when you're looking for M30 resistance, this kind of candle or this kind of candle, not a doji like this, not this candle or this kind of candle. Wait for that M30 resistance to form and then stop loss above that M30 candle high and wait for the next M30 candle to pull back, create resistance. Or if you're using my method, the M15 model, then go down to the M15 time frame, draw your fib, draw the fib, and then take the trade, right? And where are the TPs? Coming down to 2850, right? Or the liquidity candle or 2850, right? Those are your TP levels. So just above 2850 or the liquidity candle. So we've already creating, I think, support around, we're already creating support here. Yeah, so very likely that we're going to close bullish and I'm going to close my trades because this candle is pushing up, having a M30 support created here. Let's look at the 5-minute. Yeah, that's a strong bullish candle. So unless we come down again and close below 2856, a 5-minute candle closes, this current 5-minute candle closes below 2856, which I doubt is going to happen, I'm going to close my trades because the run is over, I think. We're forming M30 support and I don't want to. Now the problem, soon as this candle closes, right, soon as this M15 and the M15 candle and the M30 candle are going to close at the same time. Soon as they close bullish, that means the probability of price going down in my direction is now less. That's all it means. It's less. It can, but it's less. So when I know it's less, why still hold and hope, right? That is what most retail traders do. The mistake retail when they see price action start to form against them, they still hold on to their positions and they hope that price will eventually play out. No, you need to cut positions. It's as simple as that. You need to cut positions. It can go down, but you got to follow the same logic of cutting of managing risk. Yeah, we're pushing up. We're pushing up. Let's look at the 4. Yeah, we're very likely going to close a doji maybe. This previous candle closed a doji. This might also close a doji. Yeah, there's absolutely no reason to hold these trades. I'm going to close both of them. Close the pending orders also. And that's it. Once these close, that will be the end of the stream. I got a couple of minutes more for this candle to close. Let's see. We are closing bullish. Yeah, I'm going to wait for the last minute. Yeah, that's a bullish move up. We're breaking this high. We're going to go higher. I'm going to close one of those positions. Okay. Got one position left. I'm going to close that also in the next minute. Now, again, as I said, when you have M30 support form from a liquidity candle, the probability of price going against you, or the probability of price going in your direction is now cut in half. When you have M30 support form from a liquidity candle, right? So it can still go down, but the probability of it going down, it's now cut in half. So why hold your position? Cut your position also in half. Cut your position in half and then hold. Yeah, so 40 seconds more, let's see. Thirty seconds more. Close this. So I've given out an idea for buys. and also for sells. Sells are a little more tougher. Buys are probably what might play out today, but I've given an idea for buys and sells. I'm going to come back tomorrow and have a look at it. Okay, so I'm going to close this position. We are forming uh, M30 support here, even though it's a bullish candle. Even though it looks like a doge, it's still a bullish candle. And I'm not willing to hold. I'm not willing to hold, right? When we form this in a liquid, I'm not willing to hold. It might go down, but I'm not willing to hold. I'm not willing to take that risk, right? Um, that's how you. That's how you keep your losses small. Managing risk is the only way to keep your losses small and keep your winners big. That's the only way, right? So price might come down. We closed a kind of a doji and price might come down. That's fine, absolutely fine. But there's a probability price can break this high and head higher also. So this is now, to me, this is not a reason to look for buys because this is a doji. We spoke about this. You need to wait for M30 support um, like that, not like this. We spoke about this, right? Not like this, something like that, or something like that. A candle like that, or candle like this, from a liquidity area, from one of these liquidity areas. Okay, all right. That's the end of the stream. Um, be back tomorrow, 7:30 a.m. EST. We will do a recap and see if any one of the two trade ideas that I gave out played out exactly the way I said it would. I'm going to come back and sometimes it may have, sometimes it may not, right? But learn to visualize um, the candles. That's the reason I say candles like this from these areas where the stop loss, you should put your stop loss, where your TP should be, wait for the retracement for the entries. All of those information is given because you have to learn to visualize something before it takes place, right? So when it starts to play out, then you can take trades with confidence. All right, so back again tomorrow. Tomorrow is NFP. Be here 7:30 MEST, and we'll do our analysis and then um, look for setups. Right? See you guys tomorrow.